Joining me now to discuss all of this is Dana Peterson, the chief economist over at the Conference Board, alongside our own CNBC senior economics reporter, Steve Liesman. Steve, let's start with you first. We had a lot of data today, and it does paint that very mixed picture. So what exactly was the takeaway, and what does this mean for rates next week or 2 weeks?
Well, a bit of older data, but as I've said, old data is better than no data. I think what it does is it sets or reduces the expectation for both third quarter growth a bit because of that miss on the retail side, and it sets the expectation or the level that we expect consumer spending a little bit lower for the fourth quarter as well. There are things to work out, as you know, Dom, including the economic impact of the shutdown that's supposed to be a negative for the quarter it happened in, and then maybe you get it back in the next quarter. So a bit of shuffling around of GDP between the quarters there. I think the expectation here is that the Fed is on track, in part because of the weakness we're seeing, both in the consumer confidence data as well as in the retail sales data, on track to cut rates because of concern about weakness more than they're concerned about inflation.
All right, so that is the kind of tipping point right now that we're dealing with the scales. Dana, is the inflation the bigger threat, or is the slowing jobs market the bigger threat? It seems as though the conventional wisdom consensus has become the weakening job market matters more. So how does that factor in to the consumer confidence data we just got from the Conference Board?
Well, I think that sentiment that labor market data matter more was certainly underpinned in our consumer confidence measure for November. More people said that jobs are hard to get, and also prospects for future job opportunities as well as income and finances were worse. Now, I do have to note that there's been very little firing, but nonetheless, the unemployment rate has been ticking up because the people who are being let go, especially in finance and tech, are having a difficult time finding new jobs. So absolutely, the Fed's going to be focused on employment over inflation.
There's also, Dana, an interesting kind of crossroads here when it comes to some of that economic, maybe not pessimism, measured caution, I guess you could maybe call it that, versus what we're going to do for the holiday shopping season. I know that Deloitte just came out with their survey on holiday spending. It looks as though 57% of respondents think that the economy will be weaker in the new year in 2026. Maybe their spending is going to be lower this season as a result of that. How much of the kind of circling the wagons, kind of pulling in the horns do you expect out of the consumer this season?
Yes, we also have a survey on holiday shopping that we released a few weeks ago. And indeed, the results were the same. Consumers are saying that they're going to pull back on spending this year relative to next year. They are going to focus on buying gifts and items that or services that their friends and family need over want. And also, many of them are not really looking to travel. And so I would say, yes, we are going to see probably a softer holiday season than we did last year.
Steve, this also kind of all brings us to this idea that maybe the Fed would be hypothetically in a good place to lower interest rates just to help restore some confidence in the overall economy. I know that you reported on some news coming out just this past hour with regard to some movement that we might see on the naming of a new possible Fed chair. It might be Kevin Hassett, although I will say a White House spokesperson has maybe downplayed that notion a little bit. Can you take us through just what exactly is happening with regard to that Fed picture and whether or not the Hassett story maybe takes away or adds to some of that economic uncertainty?
Well, first of all, we have not been able to confirm the Hassett story. I have no doubt that there are people inside the administration who are talking to Bloomberg on this issue. I'm sure they did not invent this, so it's something worth taking into account. Even while the White House says it's pure speculation, I think you have to take into account that there is some momentum perhaps for Hassett inside the White House, and I don't think that that's a surprise to the market. He has always been thought of as a front runner from the White House standpoint. Whether or not that's been true from the Treasury standpoint is a different question. I think maybe there's been other people that have impressed the Treasury Secretary. But again, as the Treasury Secretary told us on air this morning, it is going to be the president's decision made sometime around Christmas. I don't know that it relates to the poor economic data that we've had recently, but it does relate to the idea that the president wants lower interest rates, and the thinking is he wants to put somebody in who is best able to deliver that to him, and that's probably why the market rallied on the news and what the expectation is. The bond market doesn't seem to care, Dom, and that's a significant factor. I guess Rick gave it a poor grade, the recent auction, but the bond market is not trading as if it will have a profligate Fed, although I will point out the dollar is trading that way.